Or we have a global expert, Matt Orton, Chief Market Strategist at Raymond James Investment, joins us now. Matt, good morning to you. It's really kind of you to join us on New Year's Day when everyone is having a hangover after the party. But first up, a very happy 2025 to you and your family.
Year to you as well. We're still a couple of hours away from that here in the U.S.
All right. Okay. In advance, in that case. Okay. Well, let's help us cast our eyes over at least the first quarter of 2025. Do you think we're going to continue to see U.S. exceptionalism? I mean, dollars finished at 108.5 yesterday.
Yeah, I think U.S. exceptionalism is going to continue. That doesn't mean that other parts of global markets can't do well. What it does mean, and I emphasize this to clients, is that selectivity really, really matters. This is where you can't just own an index fund to get broad exposure to emerging markets or international developed markets to help diversify your U.S. exposure. You really need to be specific. And that's one of the reasons why I'm so bullish on India as kind of a satellite to a core U.S. portfolio. But thinking just broadly speaking about why I'm optimistic about the market, because I am going forward. I think we're going to have a higher volatility bull market in 2025. We're already seeing what that's going to feel like, I think, over the coming months. And in particular, as you highlighted at the opening of the segment, there's a lot of uncertainty right now that we need to work through earlier in the year. There's uncertainty with respect to geopolitics. There's uncertainty with respect to what the U.S. Congress is going to look like. We have earnings coming up. But the fundamental backdrop is still very solid. I think in the U.S., we're going to see continued strong earnings growth. I think we're going to see a resumption of earnings growth in India. And I think all of that provides a buying opportunity for investors on weakness. And that's what I'm encouraging clients to do.
Matt, since you spoke about geopolitical, in a message that Xi Jinping has given as his New Year message, he said no power can stop China-Taiwan reunification. Oh. That's quite a stern message. And considering that Taiwan is the epicenter of everything related to AI in Asia, how would you read this statement and what are the implications?
You know, Reema, I think this just adds to the mosaic of uncertainty that we have from a global perspective, and it keeps investors on edge. But we've seen the saber rattling before. You know, we've talked at length in the past about why I don't like China as a long-term investment and why I think it maybe is a tactical trade at best. But China has a lot of serious domestic challenges that it needs to deal with before I think it can worry about invading Taiwan or finding a way for reunification. And we're seeing those issues continue to play out. The government refuses to still implement a bazooka kind of fiscal stimulus package that's going to give investors and consumers alike confidence in the path forward. So I think China's a wild card, but I don't think it's a wild card from a geopolitical perspective. I actually think it's a wild card from a global inflationary perspective because we are all benefiting from China exporting deflation to the rest of the world. So I often ask myself, and clients ask, well, what could happen with China? I say if China's successful and they start to get their economy moving into a higher gear, I think that actually poses more of a risk to the long-term investment perspective because it's going to force central banks to maybe not ease as much as we're expecting. But that's not my base case. I think we continue to see weakness in China, again, a reason to India for emerging markets and remaining overweight in the U.S.
Now, I take your point. Macro disinflation coming out of China is very good for India as an economy, as the macro economy. But try saying that to Tata Steel. Bao Steel is selling, according to the Tatas, they're selling steel at $50 less than their own cost of production. Forget the Tatas. And likewise, the chemical companies will tell you that. So Chinese disinflation can really hurt at a micro level. So let me boil it down to stocks. Yesterday all day we were speaking about the winners of 24. Now, the big winners have been these assembling companies, those who are trying to get into the global value chain, the Keynes, Amber, Dixon, who are, assembling plants for iPhones and laptops. They are the best performers. Do you like them? And the other set of best performers have been the e-commerce companies, the Zomatos, Swiggies, all of them. Would you like this set? Would you pursue them despite their triple-digit gains?
Yeah, I'd be a little wary because of the triple digit gains, but that's why you risk manage your portfolio, right? You don't let your winners become too large of a position. And you also try and diversify into other maybe secular growth winners, like some of my other favorite names, like a Mahindra, ICICI Bank. Those are long-term winners in my opinion. But that push for supply chain diversification from a global perspective, particularly away from China, that's only going to continue and pick up even more once we start to see Trump tariffs unfold, which I think we're going to get a picture of what that looks like very early in his new presidency in January. I also think there's drivers in India itself, a push to the more manufacturing, increased manufacturing in India by Modi. I think that's going to also help a lot of those companies continue winning down the road. So focusing on domestic production, I think is a really long-term durable theme in India in particular. And it's also a theme I'm telling clients in the US to lean into because reshoring is a very real thing that's happening. And so many industrial and machinery companies in the US are doing well as a result of that. So it all comes down to balance. So I think you can continue to hold those winners, but also look for areas of diversification, say in IT services, some of the tech consulting companies. They've done well, maybe not as well as many of the others, but as the rest of the world recovers, financials in particular, you're going to see that part of the market work too.
Okay, so for diversification, you're also looking at IT services stock. What else, Matt? And on IT, some of the global counterparts are trading at much cheaper and reasonable valuations compared to Indian IT stocks. Is there a preference? Because, one of the guests we were speaking to yesterday, and he says he would prefer global tech companies over Indian IT companies.
Yeah, I think when I look at a lot of the trends, say in Infosys, for example, I think you have to look into who their consumers are. And this comes back to that concept of selectivity. It's not enough anymore, I think, to just paint a broad brushstroke for an industry or a sector in particular. You really have to dive into the fundamentals. And so I think if you want to own some of the IT services name, number one, I want to see better free cash flow generation. But most importantly, I also want to see more visibility into the earnings trajectory going forward. And to me, a lot of that's going to be generated by asset management firms globally, as well as global financials that are leveraging a lot of IT services and Indian IT services in particular to help outsource and provide a lot of additional support, helping them integrate artificial intelligence into what they're doing. And I think you see that with a handful of Indian IT companies. So I think that continues to play well. And you've seen a rally as well. I'll call it fintech more broadly speaking, but say a 197 that's got Paytm. They have more cash on hand after the PayPay sale of their stake. And I think looking at where those companies are going to spend money going forward is going to be important too. How can they help to invest to continue to see earnings growth, especially if they do get a better regulatory regime going forward? So there's definitely a lot of opportunities, but it's that whole concept of knowing what you own that's going to be, I think, very, very important to success in 2025.
Okay, well, let us not throw sectors at you. You build a model portfolio for us. Say for an ab initio investor, what would the picks be?
So I think, first of all, you're going to want to have a core overweight. If we're going to be a global investor, you're going to want to have a core overweight to the US. And I think owning even something as simple as a SPY or the ETF RSP, which is an equal weighted S&P 500 ETF, I think that gets the job done very, very well for the US allocation because I think breadth is going to continue to play out. I think to hit your global allocation within India, I think owning companies like I'd mentioned before, I really like ICICI Bank to handle your financials and traditional banks. HDFC Asset Management is another name that is certainly worth keeping on your radar and having a stake in. I think Mahindra is the prime asset in the auto space. That is a name where you're seeing not only continued growth due to vehicle launches, they're in a very favorable space with vehicle launch, but they're also seeing growth in their farm equipment business, and they get the royalties from the other more diversified conglomerate of Mahindra. So that's a name that I think hits a lot of different parts. I like Infosys, Tata Consultancy as well to kind of round out the IT services picture. And then on top of that, a name like Adani Ports as well, I think gets you some exposure to the infrastructure theme. That has sold off in sympathy with, I think, cyclical slowdown in India, as well as some of the research and the DOJ probe earlier this year. But I think that looks very interesting, especially if we see a reacceleration in India moving forward.
Okay, yeah, and India, of course, has its eyes peeled on port and import-export gains. So, yes, take your point on port infrastructure. Thank you very much, Matt Orton. It's a pleasure speaking with you, and thank you for filling us with a bag of goodies for 2025. And hope you have a brilliant one.
Great to join you. Thank you.
Okay, so that's the word coming in, still very positive. Just, yes, US exceptionalism continues, but that doesn't mean other markets will not have very good investment picks, and you heard that list.